Okay, dear student, this is your trainer Mustafa Ahmed Mirchawala from Mirchawala Sub of Accountancy, and today's our second revision day. And our objective of today's class is the current issue. If you have seen the recent document of ACCA about the course outline, a slight changes in course outline, so they have written this climate change. They have written this climate change current issue in it, and in front of your screen, I have opened the real article written by ACCA team, right? So it's the ACCA article team, so you can, it's very relevant for you guys. Okay, so objective is not to read each and everything. I'll give you the highlights of this, what is going to become in the exam. Yes, this is very hot issue right now. Even in Europe, everywhere, this reporting is nowadays, many companies following such reportings. Okay, so now first thing, we can see there is a change in climate on this planet. You can see change in climate, and because of this, we have seen extraordinary heat waves, extraordinary low temperatures, extraordinary high temperature, extraordinary rains, or extraordinary shortfall of rains, right? Because of this, we have seen impact on many businesses, and because of this, as the business is impacting, so obviously the financial statement will get the impact as well. So these things are also relevant for us nowadays, on businesses. Like if you see United States, I can quote you the example of Dallas right now. I can tell you about this last 2 months, extreme heat wave, extraordinary level of heat wave is there, and there is no rain. Even their grass, the color of their grass changed. And government has officially announced that no need to give water to the grass, because they are already running short of water. This what I'm talking about, USA, not any developing country. So the council has already announced not to give water because they are running short of water. So people are not taking care of their gardens because they know that they need to put a new garden in the next season. So now just think, when they are not taking care of their garden, so what about the incomes of gardeners? What about the lawn moving business? This is a very super hit business in United States and in many countries. What about the fertilizer business? Just think. And many other businesses connected to this gardening thing are also affected. Okay, so because of this climate change, we have seen many changes. Second example, in United States, there are some states where the temperatures are extraordinary low, like in Chicago. It's a normal habit of people to change tires 2 times in a year, right? For summer, they use different types of tires, and for winter season, because of extraordinary snow, extraordinary wind, they have a different set of tires which they use for the winter. So this is the culture of those states. Okay, but if you see in Texas side, the culture is only same tire for the whole year. But now, because of this climate change, we see in Texas every year, like for 5 days or 10 days, extraordinary level snowfall, and the public is not ready for that snowfall. So now people are thinking that they might, from the next year, they might have to buy a new set of tires, like Chicago people. So see, the spending patterns are affecting, so the businesses are affecting because of this. So as an investor, a normal investor wants to know the risk associated with this climate change. So there's a need of climate reporting, climate-based reporting. Okay, now you can read this first para. You can read the first para quickly. I'm not going to read it. Now, there is a word, the Paris Agreement, United Nations. This is just a word right now, not no details are given in your article. But if you search on the Google, you will find that this agreement happened in 2015, where big powers, almost all the world came to one table for the climate change discussion, right? Okay. So there were many points. They said that we'll try to reduce CO2 emissions on the planet We will work on renewable energy. Each and every country said that they will bring their own plan. In this Paris Agreement, they said yes, they accepted that yes, it is very difficult for developing countries to fight against this climate change. So the developed nations decided to help developing countries in to fight against this change in climate, right? So these were the some major points of this Paris Agreement, not relevant for your course. Now, is a legally binding international treaty on climate change, which will require significant relocation of company resources if the agreed goals are to be met, right? So when just think when the governments have done commitment, yes, we'll work for the climate. So obviously the government will pressurize the companies. So the companies also have to fulfill the climate range. For example, if a company is above a certain size, obviously it's all related to the local law of that country. If that company is bigger than a certain size, then definitely they have to follow all these climate change rules. So that will affect their financial statement as well as the risk, as well as the cost, everything of that company. Okay. Yes. An increasing number of companies are providing narrative reporting on climate change issues. I give you a real example. Even I have the document as well. If you want, after the class, I can send Shell. We all know this brand Shell, right? It's a Netherlands company, and they are doing detailed reporting on climate change. I'll share their disclosure page with you, right? So where minimum legal requirements are being met, investors are calling for additional disclosures to inform their decision making. Some companies have set strategic goals such as net zero carbon neutral. Yes, even the Shell. If you see the file of Shell, they have made certain targets, like in 2025 or 2026, they will reduce 6 to 8% CO2 emission things. They will try to give up CO2 related things by 6 to 8%. By the end of 2030, this target will be achieved by 20%. By the end of 2040, they are saying we will almost 50% of the oil-based things will shut down, and by the end of 2050, 100% will shift to renewable energy. Now just think, Shell is historically oil-based company, right? But now this company is also shifting to renewable energy, renewable things, because of the climate change. See, this is a big thing. Even you can, if you read the financial statement of Shell, you know, the capex budget, the capitalization budget of Shell is higher than GDP of some small countries. It's such a big company. It's such a big company, right? Okay. Now the next thing is climate related narrative reporting requirement and expectation cover both the potential impact on the future of a business and the company's impact on the environment. Yes. How the climate is impacting the company, this we have to write, and also how we as a company impacting the climate, what we are doing for climate. Both things you have to write in the disclosure. Now, as the demand for climate related disclosure by investors and the other stakeholder increases, many companies are developing their climate governance. See, now they have a proper departments for climate. The name of this is Task Force on Climate Related Financial Disclosures. Like now they have a separate team. They have a separate team who make the disclosures for climate, who work for climate accounting. Okay, few things. Some of the information investors may require, this may come in your exam. You know, in SBR paper, this is very common. Investor aspect, you have to write according to the investor aspect. Those who have seen the past papers, those who are constantly doing the past papers, complete past papers, they know about the investor aspect thing, right? So these points are very important. This may come up as a full-fledged question in the exam. Now, the arrangements in place and the strategy The first thing, investor may ask you, what's your plan? How to fight against this climate thing, right? So this is the first point. The metrics used to monitor, like investor says, did you make any KPIs? Any KPIs? What are the goals which you have to achieve for climate? Please share with us. The opportunities and risks concerning to the climate. I've already told you that because of climate change, there is a big impact on many businesses. Like if you see, due to heavy rain, like in Pakistan, this time we have seen in UAE as well, extraordinary rain. UAE is a developed nation, but we have seen they were not able to fight against the extraordinary rains. We saw the floating cars in UAE, right? Some areas of UAE. So because of this extraordinary climate change, it's impacting many businesses. Like now, people have had big losses. Because of these losses, their spending patterns will be changed. Like because of heavy rains, employees can't come to the or proper office building, so they have to work remotely. So many things you can think. Now, the potential impacts on companies' profitability, net assets. Yes. These things are very important for investors. And because look at here. If you have studied, don't sleep, please. If you have studied, well, which area? APM, additional performance measures. Remember, this area is part of your course. And if you have done the exam kit, when I teach this area, I teach with two types of impairment. Normally, there are two types of impairment. The first impairment is physical damage, like because of rain. If rainwater comes in your storeroom or in your house, your furniture will got damaged and blah blah blah. These things. So these things are these are also impairment hints, and this is because of physical damage. There is one more impairment. Impairment, and that is related to future cash flows. Just because of this climate change, now the behavior of spending behaviors of people will change. And when spending behavior of people will change, or people will start leaving a certain country, or people will start accumulating in certain country, so there will be an impact on future cash flows. There will be an impact on future cash flows of certain products or certain businesses. And when future cash flows will change, for example, if future cash flows will go down, the present value of the future cash flows will also go down, and the value in use, VIU, the value in use will also go down. The value in use will also go down. So this is the second type of impairment. Both impairments are because of the climate. And yes, your impairment hits if your impairment is your expense, then it will reduce your profits, and so the net assets. Then, are the risk and opportunities reflected in the financial statement? For example, the assumptions used in impairment testing, depreciation rates. Yes, decommissioning. Obviously, just think, because of climate change, we have to use certain things extraordinary, or certain assets will be used less. So there is a change in depreciation rates. Similarly, one thing which we call is compulsory disposal cost or decommissioning liability. Compulsory disposal cost or decommissioning liability. Okay. For example, we need to decommission a piece of land or decommission an area after 5 years. But now, because of the climate change, maybe we have to incur more cost. So yes, definitely this climate is impacting your cost and your financial statement. So all these things the investors want to know. So these points are very important. Don't neglect it. These points are very, very important. Don't neglect it when you read this article. You have this article on your accaglobal.com. Even I can share on your group as well. No, not a big deal. And it's easy. It's not an abnormal thing. Now make up your mind for such discussion. Yes, This paper is not about number crunching, or don't think like that you will always get a question on income statement, on balance sheet, on numbers. No, it's about discussion now. It's about the overall picture of the business, right? Now, climate change and IFRS. There is no single IFRS standard which address climate change. Yes, right now, till now, you have done the course. There is nothing about climate change accounting. There is nothing about, but yes, you know one thing, even I taught you this thing many times, that IFRS is basically principle based. One thing which we called rule based, you know, United States standards, US GAAP are rule based, but IFRS is principle based. They are flexible. Okay. So because of this climate change, now I'm going to teach you, there are many standards on which we will feel the effect. Because of this climate change, there are many standards on which we can see the impact. We can see the impact of the climate change. Okay. Now, the number one is IS1 presentation, please. You know, in IS1, we need to write disclosure of assumptions, because in the financial statement, there are many things which are assumption based, like calculation of fair value is assumption based. Impairment, we take future cash flows, so we take assumptions how to calculate future on what assumptions, we have calculated the future cash flows. Similarly, see the decalculation of decommissioning liability. Yes, decommissioning liability is also related to future. IS 37 provisions also related to future. So we need to disclose the assumptions as well. On what assumptions? So as because of the climate change, I just discussed, I just gave you the lecture, because of the climate change, now we need to revise the assumptions. Now we need to revise our assumptions, and as we have to revise our assumptions, so we have to disclose it in IS1. So just think, climate change is impacting IS1. One more thing, going concern. Yes, you know, we have to assess our going concern ability, that whether we'll continue or not. So I just gave you example of Dallas gardening business. So because of this extraordinary heat wave, or because of no rain for 3 months, like 2-3 months, there is a possibility that many businesses, they can't survive. Their going concern status will be in doubt. So if there is a doubt in going concern status, so yes, you need to write in under IS1 disclosures. So see, the climate change is impacting IS1. Climate change is impacting IAS1. Okay. Now, IS2, it's ready-made, very easy. You know, IS2 requires inventory should be recorded at lower of cost or NRV. So what happens normally? What happens? We buy a product for 10 and we sell it for 15, because we all want profit. To be very honest. We wake up in the morning with the intention of profit making, right? So we buy things for 10 and we sell it for 15 or 20. But sometimes, because of the changes in environment or losses or damage or something, you have to sell it for 5. Okay. So sometimes your NRV goes down. So right now the topic is climate change. Yes. Can the climate change impact your NRV? Yes, for sure. How? Number one, because of rain. If rain comes in your warehouse and you have an inventory like related to paper, you are dealing in paper-based book-based business or something. So definitely your inventory will be damaged. And because of damage, the NRV will go down. Number two, because of climate change, sometimes you are not able to sell a certain product. Sometimes you are not able to sell a certain product because of climate change. So now that product will be outdated after some time, and outdated means NRV will go down. So again, this is related to IS2. Again, this is related to IAS2, my dear students. Now, IS12, let me explain you. You remember the topic unused tax losses. You know, because of unused tax losses, we create a DTA, deferred tax asset, because unused tax losses will give us future economic benefit. When we carry forward unused tax losses, we'll cut down, we will cut down our future, we'll cut down our future taxable profits. So in that way, we'll get the future economic benefit, right, from the unused tax losses. But if you remember that topic, IS 12 clearly says that we will only allow you to book deferred tax asset. We will only allow you to book deferred tax asset if there is a high probability that in future there will be a taxable profit. There is a high probable chances that you will have taxable profits. So now listen, because of climate change, your future taxable profits may convert into a loss. Your future taxable profits may convert into a loss. Yes, example, the mango production in Pakistan. This year in April and May time, there was a high heat wave. Now it's okay, comparatively better. But in April and May time in India and Pakistan, there was high extraordinary heat wave. So that impacted the mango production. So because of this, agricultural losses. Same is the case with India. I don't remember the product. Still, I read one article. In India, there was, I think, sugar shortage or some wheat issues, something happened. India banned the export of wheat. Initially, India was exporting wheat, but they suddenly banned the exports because there were many factors. One of the factor was that because of extraordinary heat wave, the production of the wheat or sugar, I don't remember the product, was not up to the mark and was not up to the desired level of quantity, right? So yes, this climate change is impacting our future taxable profits as well. I hope you are getting the point. Now, IS 16 property, plant and equipment. This is very good. I have a very practical example on this. I read this on that document on shell disclosure. Listen, you know, because of the climate change, your residual values, one thing, and your useful life, yes, second thing, there may be an impact. And you know, IS 16, you know, residual value and useful life is a pure estimation. We all know residual value and useful life is a pure estimation going from basic. Listen, and you know, estimation depends on availability of information. Estimation depends on availability of information. So there is a new information every year. So this is the requirement of IS 16. This is the requirement of IS 16 to reestimate, remeasure the residual values and useful life at the end of each accounting period, right? This is the requirement. So now listen, because of climate change, you find a change in residual values and expected useful life. How? Example, you know, Shell in Pakistan, no, wait, in normally oil companies are involved in three types of business. Look at me, all of you, look at here. First of all, oil companies extract oil, then they refine it, and then they sell it. Then they sell it. Oil marketing companies, OMCs, all oil margin companies, right? So there are normally three stages: extraction, refinery, and then finally retail business. Okay. In Pakistan, Shell is only an OMC. In Pakistan, Shell is only selling the oil final on the last side. But worldwide, in many countries, Shell is involved in three operations, all these three, like extracting oil, refinery, and then final retail. Okay. Now look at here. Look at here. Now, as the Shell, listen, as Shell has announced that by 2050, we are going to give up oil. We will no more be dealing with the products who are not environmental friendly or who create CO2 in the environment like this. Okay. So now when they announce this thing, so they need to cut down their oil related activities. So they were involved in extracting the oil. They had mines through which they used to extract the oil. So previously they had plans to work a lot, but now they have less plans. So now there is a possibility they are going to shut down their mines soon. So now this is because of this, their useful life will be revised. Because of this, their useful life and residual values will be revised. And this is written in that document. I will share with you guys if you want to read it. But again, this is about interest. Those who are interested in practical things or those who have time, they can do it, to be very honest. Next, IS 36 impairment of asset. IS 36 impairment of asset. This thing I have already told you. This is very easy. General thing. Yes, climate impact impairment. Climate has a link. Climate has a link with impairment. Yes. How? Physical damage. Because of climate, physical damage creates impairment. We all know this. Number two, climate impacts the businesses. Climates impact the patterns of people. Climates impact the purchases pattern. Climate impacts the immigration. People move from one country to another country, right? So because of this, yes, climates affect the tourism for sure. Climates affects the tourism, and because of tourism, many things got affected. You all know this. You guys are no more kids. So just because of last 3-4 example, future cash flows may be affected. And when future cash flows goes down, your value in use goes down. And when your value in use goes down, you have to book an impairment. Okay. So because of climate change, you have to book an impairment because of these two major reasons. Now, one more thing. I still remember one question in 2010. It came in 2009 or 2010. It came in 2010 when there was a P2 paper. And the original name of that question was Scramble. Original name of that question was Scramble. I don't know this question is still in your kit or not. I think it's with a different name. Now they have changed the name, but the original name was Scramble. And you know, in that question, there was one basic thing was tested. Listen, whenever you book impairment in any CGU, you have to disclose the reason of that impairment. Why this impairment happened? Shareholder wants to know why this happened. Why this sudden 30% downfall impairment you are booking. So you have to write the reason of impairment. That the reason of impairment is pandemic. Reason of impairment is earthquake. Reason of impairment is changes in usage pattern. Reason of impairment is change in use of asset. Anything. So you have to write the reason. So now listen, read. In disclosure, you need to write the reason of impairment. And now the reason of impairment could be climate change. Now the reason of impairment could be climate change. So don't forget. Now this climate change will impact your disclosure side of IS 36 as well. And dear students, listen, whatever I'm saying, this is all I'm giving you material in your mind. I am giving you data in your mind. These all points you can write. These all points are valid. You can write in your exams. To be very honest, it's getting inside your mind now. Next is IS 37. Yes, IS in some, because of climate change, we may get some penalties from government. Like we promised government that we'll shift to the solar. But we didn't shift to the solar, so now government will do penalties. Okay, or if we are not involved in environment friendly things. If we are not involved in environment friendly things, so we may get penalties, and penalties are linked to IS 37. Second example, which I have already told you. Is about decommissioning liability. Decommissioning liability, or some people call it compulsory disposal cost. So yes, because of climate change, there will be hit on compulsory disposal cost as well, right? Now the next thing is IFRS 9 financial instruments. IFRS 9 financial instruments. Yes, you have done special impairment rules. Stage 1, stage 2, stage 3. Stage 1, stage 2, stage 3 expected loss model. So yes, because of climate change, as we have already listened, that people goes bankrupt because of climate change. There is a downfall in the businesses. So now if I have given loan to somebody and that the guy, opposite side guy got bankrupt or the downfall in business. So yes, I have to book impairment. So again, IFRS 9 impairment scenarios will be active. You can read. Number 2, the classification and measurement of loans may be affected. Include terms of linking contractual cash flows to an entity's achievement. Yes. Now wait. You know, just close your eyes and think about financial asset. Financial asset. If you invest in debt market means if you give loan to somebody. Debt market means if you give loan to somebody. So you have 3 categories. You have 3 categories to classify in. Amortized cost. You have 3 categories for debt market if you are an investor. The one is amortized cost. The second one is fair value through OCI. And the third one is fair value through PNL. I'm sure you guys know this. You have done the course. You have done the course. Amortized cost, fair value through OCI, and fair value through PNL. In amortized cost, we studied 2 tests, business model test and contractual cash flow characteristic test, right? Okay. So now use your brain. Because of climate change, there may be a change. There may be a change in future cash flows. Future cash flows, like the guy who took loan from us is saying, I can't pay you fixed amount now. I can't pay you fixed amount now. I will only pay you the amount if there will be no rain, or I will only pay you the amount if there will be a rain. So now open your eyes, don't sleep. Now your future payments are dependent on some variable. So that's, there is a derivative. There is a derivative in the deal. There is a derivative in the deal. So now you can't record it at amortized cost. Now you can't record such loans on amortized cost. So there is a classification change. There is a classification change may happen because now there is an embedded derivative. Now there is an embedded derivative in the deal. Yes. One more area. You know, if you think about cash flow hedge, in cash flow hedge, we normally do cash flow hedging for highly probable. Remember this? Highly probable forecast transactions, highly probable forecast transaction. And in cash flow hedge, normally, open your eyes and brain, please. In cash flow hedge, normally the hedged items comes in the future. Hedge item will come in the future. Right now we have only hedging instrument. Right now we have hedging instrument. And why did we enter in hedging instrument right now? Why did we enter in hedging instrument right now? In order to hedge the risk of that future hedged item. Okay. So now just use your brain. Because of climate change, there is a possibility you will get a U-turn. You change your plan. You said, no, I don't want to buy. I don't want to buy that future highly probable forecast transaction. So now there is a topic which we call discontinuation of hedge accounting. There is a possibility of discontinuation of hedge accounting because of climate change. See, because of climate change, this may impact your hedge accounting as well. Use your brain. Now, IFRS 13. IFRS 13. Now, you know, because of climate change, people leave the country. Yes, because of the climate change, there is a flow of people from one country to another country. So there is a change in demand. There is a change in demand of properties and everything. Yes, it may hit your tourism. So if there are no tourists, so no demand of many things. Just think about the economies which are dependent on tourism. Just think about the economies which are dependent on tourism, my dear students. So in that case, the fair value of assets will go down. The fair value of asset will go down. So yes, IFRS 13, we use IFRS 13. And if these things happen before the year end, so yes, we have to see things at the measurement date. In the definition of fair value, in the definition of fair value, it is written at the measurement date. The last three pieces, the last three words of fair value definition is measurement date, that we have to see the factors at measurement date. So those announcements which came, those announcements or those events which happened before the measurement date, yes, we have to take the impact of those things. Yes, we have to take the impacts of those things in the fair value. So obviously this climate change thing is affecting IFRS 13 as well, and the fair value of many things. Okay, so this was the article written by the examination team. I've already given you 35 minutes discussion. It's more than enough, more than enough. I've given you many examples, and I request you all to read it once again. Read it once. So this looks like a hot issue. It may come. Okay, so now we are moving towards a past paper, and as the tone of today's class going towards the current issue, so I have opted question number 4 of recent past papers, because I don't want to discuss any IS, IFRS or number crunching now, because there is a yes, I'll send you the article, don't worry. I'll send you the article. Somebody is asking the article, I'll send the same article. Listen. So, except one thing, that there is a lot of general discussion. There is lot of general discussion in SBR paper, and you have to make habit for that. Even one student before the class messaged me to share some strategy. So I would recommend you guys that 5 days or 4 days before the exam, stop writing, stop doing even typing, stop typing, even leave the typing as well. Just do reading, reading. Exam kit reading with solution reading, exam kit solution, past paper solution, articles, non-stop readings, non-stop reading only. So these words, these techniques will come in your mind, that how to write, how to speak in this environment, right? It's like speaking. When you go to a foreign country and you don't know, you're not expert of that language, but when you start speaking with the people of that country, after some time, it becomes normal. You understand their style. This is the game, right? Now, this is question number 4